So we have two massive newsworthy items for SOFI stock that we have to discuss today. And this news was big enough that I had to actually break the schedule and bring you guys this video instead of the other video that I had planned. So settle in because you're going to get a big dose of truth today. And of course, we'll talk about what all this news means to SOFI stock and everything else. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. All right, so there's actually 3 big points today, and then we'll go ahead and end the video there, as I have a lot of buying to do and a lot of planning for in regards to those buys over the coming months. So number 1, huge new loan deal. All right, so I appreciate my group members there for posting this news about all this sort of stuff. And basically what I'm going to do is I'm just going to kind of read off to you guys the highlights of this particular deal that they made, so that way we can all kind of be on the same page and kind of all speaking the same exact sheet of music. And then I'll give you kind of a general understanding of what all of it means for SOFI stock. All right, SOFI, a member-centric one-stop shop for digital financial services that helps members borrow, save, spend, invest, and protect their money, announced today the issuance of $697.6 million in notes secured by a pool of personal loans originated by SOFI Bank. The transaction was a co-contributor securitization with collateral consisting primarily of loans previously placed with the Loan Platform Business Partners. SOFI's Loan Platform Business, which originates loans on behalf of third parties, generated $2.1 billion in personal loan volume in 2024. This represents the first securitization of new collateral in SOFI's consumer loan program since 2021, and the first using collateral originated in the Loan Platform Business. That's very, very different from what they've done prior. It provides co-contributors with meaningful liquidity to support their ongoing investment in the loan platform business, given the strong market demand for SOFI's personal loans. SOFI issued notes to 35 investors in the deal, representing a range of new and existing partners. Now, of course, I wish they would have broken that out further and given us all the names, but they didn't, and we may never get that. We'll just have to wait and see what all comes with all the rest of the filings as this all kind of comes through. As SOFI's personal loan products resonate with more and more people, we see continued strong demand for our loans in the capital markets, said Chris Lapointe, CFO for SOFI. This offering demonstrates the clear value of our loan platform business and our diversified funding strategy. The transaction closed on February 28th of this year and consisted of 4 classes of notes rated by Fitch and Morningstar from AAA to BBB+. Fitch Ratings assigned ratings to all 4 classes of notes, and Morningstar DBRS provided ratings on the Class A, B, and C notes. Goldman Sachs was the structuring agent and joint lead book runner with Bank of America. The transaction priced at industry-leading cost of fund levels with a weighted average spread of 87 basis points and an all-in yield of 5.10%. The notes were offered pursuant to 144A under Securities Act of 1933 as amended. All right, so a lot of words there, and if we were to actually get into what are all the various mechanics and what the heck does all that mean and everything else, it'd be another 30 minutes here sitting down trying to explain exactly all the different mechanisms in there. And of course, you guys don't want me talking for 30 minutes about anything that long. But basically, let me give you guys the bottom line with this. This basically means more fees without the associated capital outlay and additional risk being taken on by SOFI. So kind of think about that just for a second here. This isn't a traditional loan product. This isn't anything like that. This is something where they are able to take massive fees without taking on massive risk on the other end. And also keep in mind, this can be expanded into other types of loans, not just personal loans. I understand this was just simply, at least according to the release there, just simply for the personal loans, but you can expand and do the same type of business with all different types of loans that are out there. Now, just to be clear, they didn't mention that at all. So if I'm being honest here, I'm basically speculating on the fact that that may or may not happen. I'm just basically saying that it's possible and that it doesn't negate the fact that you can expand across a variety of different loan categories into the future there. And you guys know Noto is absolutely thinking about the future. So it just kind of makes sense there. But they said nothing about that specifically. So please don't extrapolate out or try to extrapolate out anything else involved with that. So essentially, this is something else that is used to moving them away from that tradition of banking, that traditional banking that we talk about over here, and more into fintech and other investing areas. We've talked about that before. That is the key to getting a hybrid multiple, because if you get a banking multiple, it's going to be a long, hard, road ahead for SOFI. If they get, a fintech multiple, obviously it's, an incredible boon I personally think they're going to get some sort of hybrid multiple. So this is another move that gives them more of that fintech multiple, more of that hybrid multiple, kind of moving them away from traditional banking here a little bit. We'll talk about the impact of all this to SoFi stock here in just a second here, guys. But we got to get to the second news piece. And that is crypto is back on the table. Now, I'm not going to run down all the political nonsense that's going on around crypto and everything else right now. I don't know. I've heard all sorts of crazy things down there. We're not going to talk about that at all. But this was an on again, off again, and now an on again thing for SoFi stock. And this obviously is exciting when you look at it and you look at SoFi stock specifically, especially when compared to other competitors. Now, remember, SoFi targets younger customers in general, and younger customers are more favorable to crypto than older guys like me, for example. That's just the truth. That's just the reality. They're comfortable with it. They understand it, and they see it as a viable investment option. And they also see it as a potential bigger use case in that future. Now, I can have a different opinion on that. It doesn't matter. The fact of the matter is they have the pulse on their customer base, and that's exactly what a large portion of their customer base thinks. So with SoFi's main customer base, it's something they really want. And of course, being able to offer it creates one more reason for someone to sign up for SoFi and stay with SoFi, because they offer what their average member wants. Now, yeah, I remember a time when my grandparents wanted lots of bank branches on every corner, and they wanted ATMs on every corner, and the ability to buy and store gold, for example, or other values and safe deposit boxes. Like, that was all very, very important to them. But younger folks, not so much. So this clearly paves the way for SoFi to do exactly that. And yes, guys, I am plenty old enough to remember safe deposit boxes and all that other good stuff like that. I haven't had any need for them for a long, long, long time. Honestly, haven't been into a physical branch with a bank for a long, long time. And I bank with some of the larger banks, and I still don't use their branches unless they force me to. I've had to do it a few times for signing documents and such, but I've even been able to get mortgages and other commercial instruments and been able to do all of it through, the internet, email essentially. So definitely something that for younger folks, this is what they want. So number 3, what does this mean for SoFi stock? Well, here we go, guys. Here's the truth. I'm sorry, it doesn't mean $75 this year or even next year, for example. I'm sorry, I know it's going to upset some people because, I don't know, folks still think that for some reason is reasonable. But if you've done your valuation or you've done a full bull and bear case on SoFi, which of course is all kind of part of your due diligence for a stock, the numbers, I can't even make the numbers support that whenever I sat down and I did my own bull and bear case. And yes, if you're serious about learning how to do that, and you want it all laid out for you step by step, and you want to work directly with me to learn that, take advantage of the March Madness sale going on now. It's the pinned comment down there. We'll talk more about it at the end. But you have to know how to do that, or else you end up being one of those people that unfortunately bought it at $18, for example, like many, believing the hype that at $45 and then $75 was right around the corner. But now you're down rather quickly, 40% or so, whatever the heck the percentage ends up being. Understanding valuation and understanding how to properly do a bull and bear case on a stock makes the difference between buying, between $4 to $7, $8, $9, and buying at, $18, $20, or whatever the heck the hype is right there at those peaks. Because when you understand that, you have to go off what management guides to. Not hype, not hope, not speculation on what a potential future could be in 2040 or just a particular, situation next year. You have to go off of which management guided to. And in this case, management guided to a good 2025, but left the guidance for 2026 unchanged. Meaning, as of right now, management saw nothing that changed the stock all the way through 2026 if you went on ahead and did your bull and bear case on that, last year, based upon the numbers that management gave. They just essentially reiterated those numbers. So nothing has changed. Now, could they change that on the next earnings? Absolutely they could. And I actually believe they are sandbagging those numbers per their usual. So I do think the number in 2026 is going to be higher. But how much higher is pure speculation and not even worth guessing or building a case around because nobody has a freaking clue. However, I will say this. Management was explicit and stated that they are using 2025 and 2026 to put money back into the business for future EPS growth. Meaning, with these new things being announced and such, these 2 big pieces of news being announced as such, we could see bigger revenue numbers than expected, right? And I hear you guys already saying, yeah, That's bigger growth. That's more growth. Those are higher numbers. Doesn't that mean the valuation goes up? Well, not exactly, because EPS is what matters to valuation in the end. You got to keep that in mind. So if they're planning on taking all of that additional revenue, all those additional profits, and putting it back into the business, it means EPS may not go up as much as you think it would if they choose to kind of reinvest that money in the business instead of showing a higher EPS number. So essentially, yeah, there's more money coming in. Yes, they could show more EPS, but they're going to take that money, they're going to place it back into the business. Therefore, that EPS number isn't going to grow. Therefore, the valuation can't grow at this stage. But that should be music to your ears as a long-term buy and hold investor, because that means that they were able to invest more now, delay that gratification for earnings, that EPS number, and getting a higher valuation for in the future having massive gains, huge runs in the stock in the future to where we make a lot of money in the future. But in the meantime, in the present, we get opportunities to buy shares on the cheap at a lower valuation. That is music. That is exactly how you make money over the long run. It's not these hype runs. It's not short squeezes. It's not all this other crap that's out there getting in and out and this options play and hedge here and trim there and all this other junk. It's not how it works in the end. The math proves that out over and over and over again. So this is exactly what I want to hear as an investor. Not only are they doing things that they didn't guide for, but more importantly, they may choose to reinvest that all back into the business, meaning that whenever they do decide to finally turn the profit spigot on per se and crank it up, there's going to be a lot more that flows out of it than would have in the first place because they're able to reinvest, back into the business. That is how you end up with massive fundamental share appreciation in the future. Not a hype run, not a whatever, gamma, mega, sigma, Rizzler, whatever, squeeze. Who freaking cares? None of that trash. That is how you get sustained, superior, incredible long-term performance on a stock where you don't just double up or triple up. That's how you get those big 10Xs repeatedly. Not once, not twice, multiple times over the time with the stock. Now, there's no guarantees that will happen. That's a long way down the road, but this is how you set up a business to do it. And this is exactly what you want as a long-term buy and hold investor. And remember, if you want to take this serious, you're ready to learn right now, you want to take advantage of whatever the heck this is, this crash, whatever it is, you want to take advantage and be prepared. You can't wait until it's already happening and it's already happened to do this. You got to do it right now. So make sure you check out the pinned comment, take advantage of the March Madness sale, get that in so that way you can take advantage of whatever chaos comes our way, through 5 free courses, through free coaching. Be a part of the best 6, 7, and 8-figure Discord out there. Jump on our live Q&As, ask me questions anytime you want. I answer every single question in there. So much involved, guys. Make sure you check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.